Welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We're diving into a pivotal Friday of trading amid growing concerns over inflation data and geopolitical developments. Let's start with the big headlines. Eli, the US CPI data is skewing risks toward a market wobble. What's the latest?
That's right, Maya. Markets are currently pricing in a 3% terminal rate, in line with Fed dot plot projections. But hotter than expected CPI data could rattle sentiment. Equities are up just 0.04%, while the 10-year Treasury yield hovers around 3.99%, having traded in a tight 5 basis point range all week.
And speaking of geopolitics, Trump and Xi are set to meet next Thursday at the APEC summit. What could this mean for markets?
Big implications. The meeting centers around extending the tariff pause and reviving U.S. soybean purchases from China. That's already boosting risk appetite. S&P futures are rising, and we're seeing strong Asian tech gains. But don't forget, Trump just terminated trade talks with Canada, adding uncertainty.
Let's turn to crypto. Ethereum's recent performance has been mixed. How does the technical picture look?
Ethereum has historically underperformed during tight monetary policy periods. It recently hit a Fibonacci retracement at the 61.8% level, holding support around $3,880. That's a good sign, but we're watching for a breakout above the 50% level at $4,047 to confirm bullish momentum.
And what about Bitcoin? Are we seeing similar patterns?
Bitcoin's in a corrective phase, trading between the 38.2 and 50% Fibonacci levels, roughly $110,742 and $113,690. The relative strength index is neutral at 47.08, hinting at potential recovery. But bearish volume, as shown by on-balance volume, remains a concern. We'll need a close above $114,000 to shift the narrative.
Let's zoom in on a few key names. Nvidia's stock has been volatile. What's your read on its 4-hour chart?
Nvidia's showing mixed signals. The latest 4-hour candle closed at $185.34, above recent lows, but volume is inconsistent. Resistance sits at $193.44. Until we see higher highs and higher lows confirmed with volume, I'd treat any rally as a potential false breakout.
Turning to commodities, gold has somewhat recovered. Is this a buying opportunity?
Gold's rebound from earlier week lows is encouraging. At around $4,114 per ounce, it's still below record highs, but stabilizing. If we see a break above $4,200 with rising volume, that could signal renewed investor interest amid inflation fears.
Before we wrap, let's touch on one more technical play, Solana. What's the setup telling us?
Solana's consolidating between the 38.2% and 50% Fibonacci zones, $188.59 to $197.96. The stock RSI is extremely overbought, suggesting a pullback could be near. Still, the zero-lag moving average confirms bullish overlap, so dips might offer strategic entries.
Thanks, Eli. Key takeaways: watch CPI data closely for equity impact, monitor Trump-Xi developments, and keep an eye on Ethereum and Bitcoin for breakout signals. Join us Monday for more updates. I'm Maya Keynes. Until next time.